Hey, and welcome to Tax Tuesday with the Tax Queen. If you're here live, feel free to just jump in within the chat, tell me where you are, or just make sure confirming that everyone can hear me and all is good. Um, I only have a few questions today, so I'm gonna get into them. And if anyone has anything while we're live, feel free to jump in and type them in. So welcome to Tax Tuesday with the Tax Queen. My name is Heather Ryan, also known as the Tax Queen, and I'm here supporting digital nomads, RVers with their tax questions, tax strategy, tax planning, and tax prep. So let's go right into the questions. I try to keep this short and sweet. If if you're here live and you have any questions, feel free to jump in and put those in there. All right. Sorry, gotta pull up my questions here. So first question is, I've been self-employed. Whoops. Can you deduct private loan interest for property? So yes, if you have a private loan, it doesn't matter if it's a bank loan or a private loan, the interest for a rental property, I'm guessing that's what we're talking about here, is deductible as an expense, right? It's a cost of running that rental property, and why wouldn't it be? So yes, the person who is on the other end of it, right, that private loan would take the interest as income. So just making sure that we both do things properly. All right, hope that answered. That's a short and sweet question, right? All right. I want to run an affiliate program to get others to promote an online event. Great. I anticipated it will be rare that any of their affiliate commission would total more than $600 in a year, and some of the affiliates do not live in the United States. Do I need to require a W-9 form for all of them? Or can I wait and see if anyone actually gets to that point where I need to issue them a 1099? So there's a couple of things here. Let's just review. If you pay someone, contractor, an affiliate, whatever, $600 in a year, so a calendar year, January to December, you are supposed to issue them a 1099. This is if you pay them directly through an ACH, cash, check, whatever. If you're paying through a PayPal service or whatever, a lot of times those are reporting, so you don't need to worry about that, and you don't need to issue a 1099. The same goes if you pay via credit card. But this raises a whole other question because these people don't necessarily live in the United States. When you don't live in the United States, there is still a form you need to collect, so that W-9 is collecting the taxpayer information. And I always say, do not pay, I will repeat this, do not pay anybody a dime, a dollar, it doesn't matter, if you do not have a W-9. So it doesn't matter if you're going to hit $500 or you're going to go over that $600 limit. I like to make sure your ducks are in a row, and so I don't pay anyone unless I have that W-9 in my possession. So I am the one, as the business owner, responsible for having that W-9 form in my records. And if something should happen and they go over that, I have to have that. And it's much harder to collect it later in the year. If they do hit it, people just don't respond, right? We all know this. Maybe they don't see the email, the request. It's just easier to not pay them anything, to onboard them directly with that W-9. If a contractor works outside the United States, or I should say lives outside the United States, there is a form called a W-8BEN, and that is the same as the W-9. So you're collecting the taxpayer information, their name, their tax ID, their address, all of this good stuff, but for a foreign person or a foreign entity. So W-8BEN, I can share that link directly here in the chat for you. So if you have a foreign contractor, this is what you would need to be collecting. A lot of times I recommend working with an online agency that will collect these forms for you. So like via QuickBooks, you can collect this data. If you use a payroll service like Gusto or whatever, they'll collect this data for you so that they are covered. But whatever contractors you have, you need to make sure that you have these tax forms. And this is on you as the responsibility, it's the business owner before you pay anyone. So I hope that answers that question. I'll repeat it. My answer is before you pay anyone a dime, you collect these forms because this is for your records and important that you did your job and your due diligence as a business owner. Right. Next question. Again, if you're here live, feel free to drop in some questions. I have some time at the end. I only have 4 questions to get through, so 2 more. So I'm happy to go through some live questions if anyone is here and has anything. Yeah. How do I calculate what I can contribute to my solo 401k? This is a great question, and it really depends on whether you're a sole proprietor or an S corp. So first of all, a solo 401k is available for a sole proprietor, so the only person, right, you're working Schedule C, or an S corp owner. This is a solo individual 401k. Sometimes it's called solo 401k, and it's only available if the owner and possibly a spouse work for the S corp or it's a sole proprietor. And it's a really great option to defer, income and put away for retirement if you'd like. So we have 2 things that we have to consider. And we have the salary deferral, which whether you're a sole proprietor or an S corp remains the same at 23,000. So this is 24 numbers, 2024, 23,000, right? So that's our salary deferral. That's amount that you can contribute to a 401k, solo 401k we're talking about here. If you're over 50, you get an additional 7,500. So now we're up to 30,500. So that's a really great option there. So that's our salary deferral. If you're a sole proprietor, right, Schedule C filer, the other part of is our company contribution. So as a sole proprietor, you would take the net profit of your business. You would subtract half of your self-employment taxes. Remember, that's that 15.3%. If we take half of it, it's the 7.65%. And then we multiply that times 20. And that's what we get for the company contribution. I can repeat that in case anyone is struggling with what I said there. But let's say, so we take our net profit from our sole proprietor income from our Schedule C business. We take off half of our Social Security and Medicare, our self-employment taxes. So that's 7.65%. And then we multiply that times 20%, 0.2. And that is the total that we get for our company contribution as a sole proprietor. I think it's 69,000 in 2024. That's the limit. So our salary deferral, remember I said that's 23,000 plus whatever that amount we just calculated, right, as our company contribution, can't go over 69,000. So hope that helps a little bit there. If you're an S corp, it's a little bit different calculation. It's actually kind of easier to me. The company contribution is 25% of your W-2 wage. So remember, as an S corp shareholder or owner, you're getting a W-2 wage or a salary from your S corp. And that means that your company contribution cannot go over 25% of that salary. And then we have our salary deferral. So I hope that answers that question, what we can contribute to a solo 401k. Individual 401k, a really great option, help reduce our taxable income, save for retirement, save for the future. Great question. All right, last question we have for today. Again, anyone here live, feel free to drop in a question live. I have overpaid my quarterly taxes for the first 3 quarters. Do I still have to make a final payment for 2024? And is there a penalty for paying taxes early? So first, if you've already overpaid, there is no requirement that you keep making payments, right? You don't need to overpay. And there's no penalty for that, but it's not advantageous, right, to overpay because the government is keeping our money and then you're going to get it as a refund, but in the meantime, they're keeping hold of your money. So I try to keep all of my clients on track. So really that means within $1,000. So either owing $1,000 or receiving $1,000 or less on a refund. So that's really the answer. There's no penalty for overpaying. The penalty is for underpaying, so not making enough in estimated payments. I hope that is clear. And that's all the questions that I got ahead of time. And I'm going to wrap it up. If I don't see any live questions, I like to keep this, pretty short, easy to digest for those who are watching it later. And my next one will be January 7th, 2025. Yes, we're jumping into 2025 and tax season, right? January. So bring on your questions. Please feel free to drop all of your questions that you have. I know that as the tax season comes, more people have questions, and I love interacting. I love having the people live. So I hope you have a great December and a great holiday season, and I will see you in January.